Finding a multi-bagger is a challenging task. We all dream of identifying a multi-bagger stock that generates substantial returns over time, like next HDFC Bank or next TCS, because these companies offer a blend of growth potential, market stability, and opportunities for value creation. What if a PMS promises to find you the next big thing in the stock market? Yes, the PMS is Marcellus Rising Giants. In this video, we can analyze this portfolio. Welcome to holisticinvestment.in. First, let us look into the company, Marcellus Company. Marcellus client base primarily include high net worth individual, family offices, and institutional investors. The firm follows a concentrated, long-term, and high-conviction investment approach. It aims to identify and invest in quality business with sustainable competitive advantage, strong management team, and attractive growth prospects. Marcellus focuses on investing in Indian companies across various market capitalization with a particular emphasis on mid and small cap stocks. Next, we shall have an overview of Marcellus Rising Giant. The minimum investment amount is Rs 50 lakh. It follows a simple investment philosophy. They invest in companies that have clean financial records, operate in niche markets with strong competitive advantage, and effectively allocate their capital for growth. It is a portfolio of high quality mid-sized companies that have been amongst the largest wealth creators in Indian equities. They invest in listed Indian companies with market caps between 500 million US dollars and 10 billion US dollars. The stocks are chosen based on the longevity and EPS growth prospect and by adopting a discovery framework. This PMS is a concentrated 15 stock portfolio with the top 4 stocks accounting for around 40% of the portfolio. The following 5 makes up around 30% of the portfolio. Bottom 5 rank accounts for final 30% of the portfolio. Next, we shall look at the fee structure of Marcellus Rising Giants. There are two options. One is fixed and the other one is hybrid. Under fixed fee, depending on your investment amount, they may charge you in the range of 1.5 to 1.25% and 2%. Under variable fee, depending on your investment amount, they may charge you in the range of 0.5% and 1.25%. And apart from that, they charge you performance fee of 10% or 5% profit share over a hurdle rate of 6% plus benchmark index. Apart from this, there is an exit load of 2% of AUM if investments are withdrawn within 15 months from the date of investment. Next, we shall look at the market cap and sectorial holding. Marcellus holds nearly 60% of the portfolio in large and mid cap companies. The rest 40% is held in small cap companies. The major portion is held on banking and financial sector, holding nearly 1/3 of the portfolio. The next in line is consumer discretionary. Now we shall look at the suitability. An ideal investor who can invest in Rising Giant PMS should have the following criteria. You should have a high risk appetite and you should be highly patient investor as the turnaround story for developing stocks may take years. You should be a volatility conscious investor as one bad quarter can trigger a significant decline in stock prices. You are ready to invest a minimum of 50 lakhs. You have a longer time horizon for investment, trusting the PMS and the fund manager until you arrive at your corpus. Even if you fulfill all these criteria, is it still worth your hard-earned money to invest in this PMS? To find out the answer, let us continue the analysis. Let us now dwell into the most important part. How Marcellus filtered their stock from the whole universe. The 5-stage approach of Marcellus. The universe is scanned and the companies with market caps between 500 million US dollars and 10 billion US dollars are selected in stage 1. In stage 2, Marcellus study the companies with further credential checks for accounting and governance. Around 40% of companies drop out from the universe in this filter. In stage 3, they use defined thresholds on revenue growth, margin improvement, working capital, asset turns, and cash generations to identify companies that are scaling rapidly and sustainably. 50% of companies fail here and are dropped off. To further support argument regarding the chosen stocks, in stage 4, Marcellus then does a thorough review of annual report, conference calls, management interviews, and other published materials. Only the top 10% of companies are subjected to these checks. In the final stage, Marcellus looks for third-party checks in addition to the company-provided information. Marcellus does not solely rely on company provided information. They conduct independent research, and finally, 15 stocks are selected from the whole universe of more than 450 plus companies. Now let us explore the returns area. First, let us look at the trailing returns of Marcellus rising giants. Refer the table given here. It has given us utter negative returns over several months, and the overall return since inception is down about 15%. Now let's compare and see how Rising Giants portfolio has performed with its benchmark index. Upon reviewing the performance of PMS, it becomes apparent that it has consistently lagged behind the BSE 500 TRI benchmark. The returns since its inception are notably poor compared to the benchmark index. The drawdowns are also notably high. In terms of performance, the PMS falls short of the expected standard where it should ideally surpass its benchmark indices. Okay, the Rising Giants portfolio didn't beat its benchmark index. Now let's go a step further and do a comparison with Nifty Next 50 over the same period. You can refer the chart here. The Rising Giants have underperformed the Nifty Next 50 by quite a big margin. But what is the reason for this underperformance? It is believed that these companies were bought at a very high price at a time of COVID. Now, after a state of normality post-COVID, the stocks are undergoing a period of consolidation. This is said to be the reason for diminished returns. Now we can compare the returns of Rising Giants PMS with actively managed mid-cap mutual funds. We observe a significant difference or gap. The returns given here are for 1 year period. Now let us look at the taxation. Previously mentioned returns are pre-tax returns, and considering the impact of capital gains tax, the actual return would be lower, resulting in different post-tax return value. In comparison to mutual funds, PMS are typically less tax efficient, which could result in a large tax burden. Mutual fund investors may enjoy tax benefits that are not accessible in PMS. So, investors should consider tax implication when evaluating PMS returns. Marcellus PMS have other portfolios. We can have a brief outlook here. Marcellus Rising Giant PMS invest in high quality mid-sized companies. Similarly, each portfolio has an investment strategy. Marcellus Consistent Compounders portfolio predominantly focuses on large cap funds. Marcellus Kings of Capital is based on the banking sector. Marcellus Little Champ focuses on small cap companies. If you need a detailed info about each of these, then check the link in the description. Now we have reached the final part. Final verdict on Marcellus Rising Giants. 1 year performance review of a portfolio management service may not provide a comprehensive view. So it is currently not advisable to consider Marcellus Rising Giant PMS. Despite being a relatively young PMS, it has failed to impress investors. The overall portfolio value has experienced a decline of approximately 15%. The top 4 stocks account for around 40% of the portfolio. Any issue with one of these 4 stocks would have a huge implication on the CAGR. The PE value seems to be 58x when the stocks were bought. This is thought of to be the reason for the underperformance of the fund. The primary goal of investing with a reputable fund manager and PMS is to achieve substantial return on your investment. Here, the fees is significantly high, but the returns are substantially low. So, in conclusion, if you are seeking to diversify beyond mutual funds and pursue aggressive returns, it is advisable to look away Marcellus Rising Giant PMS and explore alternative options such as more consistent performing PMS or thematic funds. A detailed blog post on this topic is available in our website, and the link is given in the description box. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming Enlightening Investment Webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.